shaky fundamentals and structure. These are all things that people are worried about. So that's where you kind of see this old asset class called GLOD, or gold, as you call it, come back to the fore. Because at the end of the day, you can touch it, feel it. It's been around for thousands of years. It survived, civilizations, eons in human history, and there's always been a fundamental value anywhere you can go in the world.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today we are going to be digging back into silver as we start off 2023. And interesting start. We had a spike up in the metals to start the year, and then prices came back down a little bit. So still quite early, only a couple of days in. Although to dig into some of the action, I have my dear friend Jerry Huang of Gemini Capital, who has been on the show a couple of times. It's been a little while, although Jerry is in quite a unique role there where he's going in between some of the companies, talking with investors each day, and quite in tune with the market. And someone that back when I was still in my early days of the show, I would call up Jerry and get information on what was happening. So we will be digging deep today. And Jerry, it's a pleasure to see you again on the show. And how are you doing so far in 2023?
Yay, happy New Year's, Chris, and thanks for the invite. Lovely to be back on the show again. Congrats on all your success, you and Yara on Arcadia, all the work and all the subscribers. Yeah, like you said, I'm behind the scenes quite a bit on the drilling business back in the days with Energold, and of course on Impact Silver, day-to-day operations. And we also see a lot because we invest and we work with a few public companies on the Gemini Capital side.
Well, it's certainly a lot that you get access to, and perhaps that'd be the place to start where I know you're talking to a lot of investors in addition to the companies, and I'd be curious to get your opinion. How do you think people are feeling about silver right now? I mean, we had this volatile 2022, getting towards the end of the Fed rate hikes, silver price back recovered a bit, the stocks still seem like they have a little catch up to do. But when you talk to the investors about silver, what are they saying? How are they feeling right now?
Yeah, for sure. I mean, it hasn't been an easy year, to say the least, Chris. I mean, you look at the charts. Nasdaq had a terrible year. All the FANG stocks are down 30% across the board, and it's in some cases, Meta, Facebook, even Microsoft are down 40, 60% in some cases. There's a market darling here in Canada called Spotify that was about $2,000 a share. It's back down to $400 or $500, right? Like it's a disastrous end of the year for most tech investors. In broad market, S&P, Dow Jones, nothing has been immune, right? I mean, the higher rate going from near zero to 4.5 overnight rate has just completely erased, a lot of the risk appetite out there. There's investors I know that are just sitting on the sidelines on a few million or a few $100,000 for high net worth investors. They're putting into GICs, which are in Canada, FDIC insured, up to 100,000 per account. So, I mean, if you're getting paid to wait at 5% GIC, it's not a bad idea versus losing, 5% per month right now out there. So I would say that's generally the appetite right now. It's definitely a bit of a period of waiting until this, rate hike cycle ends. We're all kind of watching the Fed's tomorrow. About the next 50 basis point, if that's going to come. And I think most of the world's going to be following the central bank in the US regardless. And I think there's like 73 banks that follow suit. You saw the Bank of Japan recently, obviously changed their rate after a very, very long hiatus. So that's really just kind of telling you, the government really have to watch the market closely. I mean, you saw the UK bank and the sterling really drop off a cliff right before the new prime minister came on, a few months ago. So the market is very jittery right now. But to pull that back to our little micro cap space here on the silver and small cap side, financings are getting done. It's been a difficult 12-month for silver. Starting off the year, it was pretty positive. It was just 12-month after Wall Street Silver, Wall Street Bets, really shone a light on the small silver sector, how how easily manipulated it would have been. I mean, early 2021, silver squeeze, as we all saw, pushed some of the names that we all follow, First Majestic, Tekla, and the silver price over $30 within the days, right? In January 2021. It's almost 2 years out now after that. And silver is back up to a very reasonable rate and price point where most mid caps and small caps can naturally make a profit at $22, $24. Whereas back in the summer, during the summer doldrums in August, it was $17, $18 an ounce. It was quite frightening. Right? I mean, most of the miners we follow, including Impact, had a pretty rough Q3. Q4 should be a bit better, but I mean, heading into 2023, with inflation and everything else, things look better for sure. I mean, you see that trough right there. I think I actually have the same chart in our slide as well. It was a very slow April through essentially October up until this recent rally in silver prices, and it's been a very irrational year because the actual commodities across the board, lithium, oil, zinc, iron ore, you name it, has actually been on an uptrend, right? Copper hit over $5 a pound before pulling back due to this slowing China demand. But really quickly to recap, there is some money out there in the last 2 months. There's been a flurry of financings of whether it's resource developers, explorers, very high grade explorers. I mean, the explorers are still having a tough time raising money. Most of the financing we're seeing in the last little while, Kuya Silver, whom I think you've had on the show, Kuya, they've all successfully raised, 5 million plus, which in our space is definitely a meaningful amount, whether to resource develop or continue expansion. SilverX raised some money recently. I believe Dolly Varden just closed a fairly large financing of 17 million. And really quickly to recap, there's also this life exemption that came out recently for Canadian investors, which are free trading shares. You can raise up to 5 million for without accredited investor status. So there are little things that's really helping being catalyst in the space that we all work in.
Yeah, and it's an interesting environment because obviously you have the volatility in silver, and finishing the year 2022 actually in positive territory, which many times didn't feel like it. And I remember quite well, as you pointed out, those doldrums back in September when we were, well, unfortunately you were not there at the silver symposium, although that was interesting times where each day we were there, silver was down 30 or 40 cents, below $18 into the $17 range. But at the end of the day, I know, as you pointed out, because people are getting clobbered in a lot of the other areas of the market and going to cash, yet we do have this dynamic where with inflation rates, depending on which country and which metric people use, still you're losing 7 or 10% or possibly even more on just holding cash, which makes silver interesting, especially now seeing some of the rebound. And another thing I found quite fascinating was that on Tuesday, the first trading day of the year, would you believe what was on the front of CNBC? They were actually talking about this thing called gold. Who would have guessed? I was quite surprised myself, but gold surges to 6-month high. Analysts expect records in 2023. Interesting. We've seen a lot of the banks and other folks raising their forecast for gold, some as well for silver. And what are you hearing in terms of just the gold and silver specifically as the commodity, and from the people you talk with there?
Yeah, I mean, Chris, good point. I mean, I saw similar headlines too. I mean, for CNBC, this is definitely mainstream. I think what's really happening is people are running out of ideas, right? I mean, most of the analysts are when I used to work at the bank a long time ago, there's something called the index chart, which I think people have all seen variations of. I think US Global and Frank Holmes' team has a great version of it, where every 5 to 10 years or 5 to 7 years, these performing asset classes shift, right? For the last 4 or 5 years, it's without a doubt, it's been S&P and large cap stocks, right? Like tech, Microsoft, Tesla, yada yada. They've done phenomenal. It's almost a couch potato strategy, which is a way of really just sit and wait, right? You buy a basket of these large cap stocks year in, year out, plus dividends, you're averaging 15, 20%, right? If you can average that for the last 7 years, you've essentially doubled your money, and with very, very little risk. This year, however, has been completely different, right? It's not the year of passive investment anymore. ETFs are having a tough go, and things like this where you're starting to see gold on the headline. It definitely means the confidence is really wearing on people. People are really wondering what's going on. I mean, last year even, beginning of the last year and the year before, you had this euphoria where kind of everything goes, right? I mean, I mean, you don't really have that, didn't really have that too much in the US, but in Canada, we had a bout of cannabis. Blockchain, obviously, it's going to completely erase confidence, thanks to FTX and Sam Bankman-Fried, SBF. This whole scandal has just got really completely eradicated confidence in the blockchain and Bitcoin, which personally I think there's some value in there, but obviously if in the near term, if Binance and some of these KYCs hurdles are up for questioning, then the fundamental the large caps are really, it's going to be really hard for any of the larger institutional investors to come in when Gemini, the other Gemini with the Winklevoss twins, are potentially in shaky grounds on shaky fundamentals and structure. These are all things that people are worried about. So that's where you kind of see this old asset class called GLOD, or gold, as you call it, come back to the fore. Because at the end of the day, you can touch it, feel it. It's been around for thousands of years. It survived, civilizations, eons in human history, and there's always been a fundamental value anywhere you can go in the world, right? So whether that's a digital gold version, and there's various variations of that on the ETF now in 2023, or the actual hard metal, gold and silver, having a few ounces probably wouldn't hurt right now.
Yeah, and obviously the thing that is on many people's minds is if we head into a recession. I know there's a school of thought that we are already in a recession in many areas, and I mean, I think at the very least, people perhaps outside of the White House can agree that things are not ideal, regardless of whether technical recession or not. Um, which is just interesting seeing people talk about gold and silver performing well. Obviously, if you have a reversal in the Federal Reserve policy, which I know they're talking about being concerned about the inflation, yet even despite saying we're not going to pivot or anything, their projections show lower interest rates at the end of 2024. So we'll leave aside the fact that they are talking about pivoting, just maybe not yet. Although amidst all of that, Jerry, I know you have some slides that you wanted to share, because we do have silver, according to the Silver Institute numbers, showing the largest deficit in history in 2022. A lot of the green movement calling for a lot of silver and other metals that I guess maybe something you could comment on.
Sure.
Seems like we're going to need quite a mining effort to get anywhere near these green mandates. But
Definitely.
anyway, what could you share on all of that?
Yeah, Chris, I mean, I won't go too much into the detail. We'll share the slides for afterwards, but hopefully you can all see the screen here. So just a brief silver outlook for January of 2023 into our little sector here for silver mining. So again, the materials and commodities sector, as we talked about earlier, has clearly outperformed. So these are just a snapshot of some of the materials, compared to most of the other sectors that's really gotten decimated. So really, you're seeing that really reversion to the defense stock, right? So the pharmaceuticals, the consumer discretionary, the pharma, the grocery stores of whatnot. These are really the outperforming sector, and of course, oil and gas, right? We all saw oil go from -38 during COVID to over 150 at one point briefly, and then that's continued to hold on. But other than that, really, it's really it paints a picture of really heightened inflation due to a large part of commodities. But we're actually seeing a nice opportunity for the producers, which are really trading at still a very reasonable multiple, as I'll show you in a bit. You talked about this specifically in a bit, Chris. This is from mid in the year. It's only gone worse, I think, throughout the year. So you see the silver deficit forecasted in 2021, 2022, and again at the same time on the bottom you see silver grades only dropping, right? Whereas average silver price hasn't really gone up that much. Vis-a-vis to really the ore grade. So the ore grade has dropped by 55% as of late 2020, but as we're printing and talking about this right now, silver price is barely 20% higher at $24, right? So it's really a bit of a puzzling disconnect. And one thing we all know about disconnects is that they can only last for so long before fundamentals push on, right? And facing that supply deficit across the board, whether it's from Silver Institute, CPM, and various other industrial reporting bodies, we know there's something coming. And this is in light of new demands from industrials like silver solar panel cells, photovoltaic, and obviously the big broad push thanks to the massive Inflation Reduction Act pushing for more EVs and electric vehicles, right? So the chart is looking very good. This is as of I think this week from one of our investors and friends in the space, Tabby Costa at Crescat in Denver. So again, silver is already forming a coming handle. So going into 2024, 2029, you're looking at this, significant upswing, looking at, plus $30 per ounce pricing after a long period of this basing, like from the 15s, 2015 through to 2022. On the bottom, you see this new need of photovoltaic or solar panels in silver that really hasn't been very material in the past, but it's very much steadily growing to the point where it's now about 9%, 10% of the silver annualized demand, which is becoming significant. And we know that can grow very fast with the Tesla solar panels, silver wall and power walls. We talked about this briefly earlier, so I won't go on much, but this is an overlay chart of all the previous recessions we've seen. So this black line is from December 2021 to date, and this kind of represents the amount of drop percentage-wise. So we've dropped about 20% so far, and it's been about 230 days if you're just counting that. So technically, we're not in recession because of the GDP, two consecutive quarters. But I think we can all agree, for a lot of us in the mining space, it feels like it's been a bit longer than just this quarter. So I think we're a third of the way. If that's the case, then that would peg us at about another 200 or 350 days or so left, which would probably put us at the end of this year, if we're kind of calling for a rebound. But as we all know, our sector is very leveraged, very torquey, so that can certainly happen a lot faster. There is definitely a uniquely distinctive problem for 6 main metals on the London Metal Exchange, LME. As you remember, early in 2022, there was a run essentially, or a supply crunch on nickel prices, where nickel shot up to 100,000 per ton. And you see that possibility again. It's the LME warehouse, so physical supply is at almost a multi-year low, 25-year low, right? So, and this is actually the physical supply. So something is quite off here, because the prices are dropping, but yet the supply is dropping as well, which is a confounding factor. But you kind of see that it's a very funny situation. I mean, so they've stocked up on obviously nickel because of that run on the percentage and the price change over the year, but everything else actually, even though the pricing are dropping, the supply is dropping as well. So people are pulling off on production because everyone's fearing China slowdown, this recessionary fear. So why would you produce when the prices are low? So it's kind of like a double whammy. So the minute things go back up, there's almost not enough to trade and go around. So we can actually see that across various commodities: copper, aluminum, zinc, nickel, lead, tin, and even silver. Valuation wise, this is going to be a really a head scratcher slide, a lot to go over. So this is a monthly slide from some of the investment banks in Canada. It's very data heavy, so I won't go into it too much. But I want to paint the picture is that these metrics give us an idea from the super majors, 30 million plus ounce a year, to the mid cap, 10 million ounce plus a year producer, to really small mid cap developers like Impact, New Pacific, Silvercrest, some developers which have big resources but currently small production. And the main thing I want to kind of show you is that on a price to NAV basis, these companies are this is as of last month, so not too out of date. If anything, some of these have only gone cheaper because of the tax loss selling in December, which is famously known to drop another 20% on the TSX Venture and the TSX. But you look at Core Mining, First Majestic, because of maybe Keith and Todd's great efforts, they trade at a multiple. They trade at a great premium to most of the peers. Most of the sector and the guys trade at 1.3 to 2.2, which is very low valuation considering their net asset value. So you're barely worth twice what your asset value is worth on a share price basis. right? So, and this is kind of this highlighted section kind of gives you an idea of how large these guys are, right? They're not small. A lot of them are fairly large, 20, 30 million ounce a year at $20 an ounce silver revenue. You're well over 600 plus million, in revenue, right? So these are not small companies by any stretch of the imagination, but you're getting a tiny multiple. Just kind of give you an idea of the price to NAV multiple of other sectors. Like like big pharma trades at 5, tech usually trades at 10 to 15. So mining is very, very undervalued, even before this current drop, right? So that kind of is really kind of painting a picture of these are very well placed bets in terms of belief in the underlying metal, because when they go up, they can easily get to a fair valuation of 5 to 10, which you're looking at anywhere from a 5 to 10x return potentially. AISC stands for all-in sustaining cost. So what this means is the all-in sustaining cost of producing an asset, producing an ounce of silver, and then finding the next ounce, right? So in terms of a cost basis, you're looking at EV EBITDA of anywhere from 5 to 15, which is fair. But again, these are not tech company multiple by any means. Most of the quality producers in the sector, First Majestic, Aya, Endeavor, they're only trading at 5 to 10 times, which is very, very cheap on an EV to EBITDA basis. So again, another indication of very good value in the space. And these are big guys. I mean, if you go further down the food chain, you even get guys trading at lower multiples of that, 2 to 3 for guys like Dolly Varden, for Santa Cruz, and yada yada. So the list goes on. Free cash flow, unfortunately, most of them are actually negative, right? So if you're a value investor buying purely for free cash flow, that means they're actually throwing off cash flow after reinvesting back in the business. This is not the sector, right? So even for the majors, Chris, Core, First Nelio, First Majestic, they're negative free cash flow investments. So I mean that a lot of guys get stuck up on the fact that you need to have a free cash flow. If you believe in the underlying asset, if you believe in the underlying metal, this should be your last concern. Like these are going concern businesses. You're already on kind of the blue chip side of the silver mining, gold mining investments. But if you're looking at Core, First Nelio, First Majestic, they are what we call going concern. They don't need to raise money to keep the lights on. Whereas the further you go down the list to developers, to small cap producers, sometimes they have a good quarter, sometimes they have a bad quarter, right? So Santa Cruz, like Atelier, there's been a number of blowups, and unfortunately in the silver mining space in Mexico, as we all know, it's like Arcadia has gone bankrupt, for example. Like there's been it's a very challenging space when you're working with operational uncertainties, and then of course fluctuation on silver prices, which has swung from beginning of the year 2022, $25 an ounce to as low as 18, right? That's a huge swing. That's a swing of 30% plus, which most operations don't have that kind of margins to play around. The AISC, as I talked to you earlier, surprisingly high. So again, like I said, I mean, these are some of the biggest in the world. And really the AISC are in the 20s. You can kind of see the average here. You're in the high teens. So if you go smaller, your cost of AISC producing an ounce plus finding the next ounce is even higher, Chris. Now, this is actual 2021 actual numbers. So we're looking at $19 to $18 an ounce for medium and large producers, right? So for impact, I mean, we don't even put out an AISC. We put out roughly a marginal cost of production plus finding the next ounce, which we average about 5 to 7% for ongoing drilling, about $20, right? So that's pretty respectable for a sub-million ounce a year, versus some of these guys are producing at 6 to 15 million ounces a year, 10 times larger. But even at 10 times larger, you can see, Chris, the cost isn't much lower, which really surprises people. So silver at $24, most of these guys don't even make that much money. So I mean, that's really a roundabout way of saying, how can these prices stay? It's kind of like a lot of the uranium guys saying, if Cameco can barely make money at $45 a pound uranium, and we need a lot more uranium, how is that sustainable, right? So at some point, I think that will catch. And then obviously, this is why you got to really pick some of the good horses and jockeys to really play with and invest with in the space. They have to really have that staying power, because we all believe these will go higher. They have to go higher, because really these are some of the biggest producers in the space. And if they can barely make money, how the heck is price of silver at $24?
Hello,
The person.
Jerry. If I may toss a question in
Oh
there,
yeah, definitely.
how do you reconcile that with the way that the non-primary silver producers are looking at things, which is 65, 70% of the market? How does that, how do you factor that part in there? Because what you're saying makes sense and there's truth to it.
Yes.
But how do you balance that with the large chunk coming from the copper, lead, zinc, and gold miners?
Definitely. Yeah. No, I mean that's quite spot on, Chris. I mean that's kind of in a way what this next chart talks about. And that is very hard to find pure silver players, right? Once you get to size, it's often a lot more efficient for a silver miner to become a gold miner, right? For every ounce of silver, you can for every ounce of gold, it's essentially equated to 85 to 1 right now, as we all know, right? So it's really the same process producing an ounce of silver versus an ounce of gold, nothing really different, but now you're getting 85%, 80 times, 85 times more per ton in terms of revenue, right? So it's a no-brainer. So that's why you can see that, yes, combined, you're looking at probably 900 plus million ounces of silver produced per year. Some of these guys combined, or there's probably about 300 million ounces on this list right here. So it's about a third of the world's production. But you look at the actual silver versus gold, right? Core, First Neolio, First Majestic at Jerry Canyon, they're now 63, 72% plus gold producers, but they convert that on an 85 to 1 basis to ounce, a silver ounce equivalent,
Right.
which in a I guess in an all equivalent world, assuming silver prices don't go higher, Chris, that's fair, right? I mean, if you can produce something at $85 an ounce, why would you produce it and sell for $1 an ounce, right? So that's kind of the conundrum right now. I mean, why would you can produce an ounce of silver of gold, sorry, at $1,800, sell that $1,800 and buy 85 ounces of silver. But that's only assuming, and that only obviously works if there's no shortage and silver prices stay at 24, which obviously we think is going higher, right? So that's kind of the funny thing here. Some of these companies used to actually be called silver companies. They've now broadened their name to, from Bear Creek to Endeavor and even Hochschild. A lot of them, GoGold used to be a silver company. Right now it's called GoGold Resources, right? So they're 50% gold and they're now 42% silver, the rest of lead zinc equivalents, but they convert all to silver because silver definitely has that appeal to the average investor. But my point is, it's quite hard to find pure silver plays. Again, that only drives that scarcity argument, right? So you want to really find that big silver asset, which is more than 50, 60%, if you can help it, allocated to silver. Because when silver goes up, gold probably will lag behind, as we've seen time and time again, right? We saw gold go crazy last year during silver squeeze, but silver really outperformed, right? Silver went from 21 beginning of last year to like 32.
Those were the days.
I'm sure we'll see that again, Chris. So hang tight. So again, last chart of this like number filled pages, and I'll put this up. You can you and your readers can go through it at depth. We get these every quarter, so they're very extensive, full of data, very useful. But this is a reserve summary of some of these majors, and you can kind of see in terms of years, you're starting to get into the single digits, which is, if you're planning on the corp dev side or you're CEO of Endeavor, First Neo, and First Majestic, you're definitely looking around, right? You only have proven probable. I mean, this is proven probable. There's still a lot in inferred. They need to continue drilling, so that becomes a proven a reserve versus resource, right? So now they know they can make money. It's called a reserve. So, but you're looking at 4 years left for Keith and the team, right? So they need to do something here very quickly, or continue to bring their measure indicated resources to the reserve basis category. Otherwise, I mean, there's going to be like a lot of smaller miners like we are. We're kind of mining off our internal studies, but it's very hard to publish a forecast for analysts in the street to at least show how long of a mine life they have left, right? But you can kind of see there's definitely an M&A going to happening in the space. And one thing we know in the space, because of the lack of capital the last 10 years, it's a very empty and hollow middle. There's not a lot of mid cap guys in the space for First Majestic to buy. So if I had to guess, New Pacific, Silvercrest, these are the kinds of guys they would buy because it immediately adds reserves to their books at a discount, right? So if you're the CEO of one of these big majors, Chris, you probably do the same thing. It's a logical thing to do. They're trading at a cheaper price than you. You can use some shares and you have some cash, and you want to obviously show that track record and that really forecast out 5 to 10 years, right? So anytime this gets below five, I would think any of the top brass of these companies are definitely looking around. So again, that goes very well.
Yeah, well, I appreciate everything you shared there. And perhaps the last question I have for you is that you talked about earlier how some of the companies are still able to do financing, and conditions have allowed, a lot of these companies to do what they need to do. Yet it seems like we're still a bit a ways from the point where you have new entrepreneurs going out, starting new projects, kind of like we did see a little bit more so in 2021. What do you think it takes to get back to that environment? Because as you showed, not tons of projects with reserves out there. I mean, is that at $30 silver price? I mean, does it require a big change in just the equity sentiment that's out there, which obviously you talked about before? In general, not the easiest time for equities, but what does it take before we get more exploration, more development, and just more activity going? What is the threshold there?
Yeah, no, it's no easy number to really pinpoint, Chris. But I mean, like I said earlier, and showed earlier on that Crescat chart and some of these technical trading cup and handle formation, I would say about 25, 26 would be able to get definitely more interest back in really the sector. Again, it's a very entrepreneurial sector. People come and go. People change commodities right now. Obviously lithium, EV metals, battery metals are really in the spotlight. There's a bit of a window for silver. I rattled off a few financing that successfully happened right before the end of the year. There's a few more coming around. I'm sure as the kind of the beginning of the year, the show circuit cycle begins up to PDAC in March. And certainly at $24 at the silver plus, that certainly helps a lot. But to really see new exploration come in, it's such a long lead time, Chris, that it's probably easier for investors to find existing developers and resource producers that are turned around, or all of a sudden next quarter they can make a profit. As we've seen, anytime the prices go up, you'll get definitely a lot more of a really impact on the majors. It trickles down to the mid-tier developers, small cap producers, and unfortunately then down in terms of financing pecking order down to the explorers. But the explorers will always offer you obviously much higher risk adjusted rewards. We call that going to zero to hero, right? Like you go from zero, moose pasture, you find something, it could be 50 million ounces, could be 100 million ounces. You don't really have that certainty of how much there is. Once you do, then you can certainly a lot easier put a price or ounce in situ, ounce in the ground. And I think silver is going for about I want to say about 10 cents to 20 cents an ounce in situ, whereas gold goes for about $80 to $100 an ounce in situ, right? So at that point, you then have a bit of a valuation, a bit of an idea of how much it's worth. But on in terms of the financing size, I would say, and certainly the price of silver, that euphoria, the minute it comes up to like 26 and overnight maybe it shoots up to 28, we're going to see a flurry of activities. And then, of course, if that activity and demand isn't satisfied by just by the pure developers and producers, then we're going to see a whole bunch of new entrepreneurial, restart projects that were dormant, they went bankrupt in kind of the down market, they'll get rehashed back again, right? That's the beauty about mining, Chris. These assets took eons to form in the Paleozoic period, in the lava formations and the VMS or the epithermal veins. So in our human time and time scale and lifetime, it's like a second, right? In the grand scheme of things. So these assets will survive, and I guess in a way that's the beauty of mining hard assets versus coding, blockchain, tech, cannabis, even magic mushrooms that kind of came and gone on the TSX on the North American exchange the last 2 years.
Well, obviously, silver is something that we're going to continue needing, and seems like the uses for silver are growing by the day. And again, as you pointed out earlier, we did have that big deficit in 2022, and I suppose that could change in 2023. I've yet to see anything suggesting that we would see a market difference from that standpoint. So, Jerry, appreciate everything that you shared here. And perhaps just before we wrap up, you could let folks know if they'd like to get in touch with you. So, you have the Twitter is Capital Gemini, and I have your website, which I will pull up here. And perhaps you could
Great,
share the address and let
definitely.
folks know what you guys are up to there.
Yeah, for sure. Thanks, Chris. Yeah, so like I said, we invest a lot. We work in the sector on the operations side too, with silver miners. So we do know the space quite well. We have a good pulse in the market on terms of financings, the new financing exemptions. You can follow us on Twitter. Where I think we're just shy of 10,000 now on Twitter. So got the new blue check mark very recently, just like Chris. So very happy to have that verify status. So on Twitter, it's both Capital Gemini and Gemini Capital. Website is just geminicapital.com. We invest in the space. We work in the space daily. It's a small team of 4 or 5 of us, posting content, doing due diligence on research, and we'll share the deck on the YouTube channel as well. So you can definitely go into more details. It's off several sources, from Goldman Sachs, from BMO Silver Pages, from Bloomberg, and obviously Middle Pages and Kitco as well. So all the quality sources, and of course, we try and hit up Chris and Arcadia's page where we can for news and inspiration and new ideas.
Well, I appreciate all that you're doing out there, Jerry. Obviously, with the cyclicality of the silver space, it's not easy for the companies. It's not always easy for the investors. And, yet at the end of the day, we need silver in the world. So certainly in the time that I've been doing this, have grown a great appreciation for the people that hang in there and make these things go, of which you are one of them. So folks, you can find Jerry at geminicapital.com or on Twitter. And Jerry, just appreciate all that you're doing. Great to see you again, and hopefully be able to catch up with you in Vancouver one of these days soon. And just thanks for coming on and laying out a nice presentation of everything you're seeing in the silver world today.
Definitely. Yeah, sounds good. Thanks, Chris. Appreciate the invite. Always a pleasure being on your show and your platform, and always a pleasure seeing the number continue to grow, and your dedication to the space it's just unmatched.
Well, I appreciate that. Thank you. And we'll have to do this again soon, my friend.
Definitely. Sounds good. Thanks, Chris.
Well, thank you, Jerry. Sure appreciate everything that you shared there, especially as he has a unique insight into a lot of the things that are going into the silver world, both from the mining side as well as on the supply and demand side of silver itself. So hopefully you found that helpful at home, getting an idea of what the market is like for some of these silver projects going forward as we continue on now into 2023. Real quick before we wrap up, I would like to pass along a word from Kuya Silver, a silver mining company down in Peru that will be going into production this year. And we did have some news out this morning from Kuya Silver, as they have acquired the right to purchase a 100% interest in their Silver Kings joint venture from Electra Battery Metals that is up in Ontario. And if it proceeds as planned, would give them exclusive rights to approximately 16,600 hectares in the Cobalt, Ontario Silver Mining District. And the deal would also give them the ability to acquire Electra's indirect interest in 1,400 hectares owned by a third party. David Stein here, the CEO of Kuya Silver, who was on the show last week, mentions that they believe the time is right to consolidate their interest in the cobalt silver mining camp, which has the potential for high-grade near-surface silver that could become a second platform in their growth pipeline and would help differentiate Kuya from other single-project junior companies. And given what they know about the geology of the area, looks like they will have cobalt as a byproduct from what they are mining there. Back in February of 2021, they had an option to acquire up to 70% of the interest in the Silver Kings project. That has been amended now up to 100% interest. Conditions are making initial earn-in payment in the form of common shares of Kuya worth $1 million by September 1st, 2021, which was done, and B, making an additional payment of $1 million in cash or issuing the equivalent value of Kuya shares. and granting a 2% royalty on net smelter returns to Electra based on the commercial production from the Silver King joint venture property. To read the press release with the full details, you can click on the link in the description field below. And again, congratulations to Kuya as they have acquired the right to expand their land package. Going to wrap up for today, but we'll look forward to seeing you again tomorrow.